Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This special weekend video is for Saturday, January 21st through Sunday, January 22nd, and of course, as always, is brought to you by Realtik. All right, I just wanted to cover some keys about Friday's action. What am I looking for in terms of action on Monday? And again, folks, the one thing that stood out to me on Friday was the lack of volume. We basically did another 110, 115 million. It was insanely light. Now, again, normally you wouldn't be surprised at that because that's the way it's been since the new year. But considering the major earnings of Google, Intel, Microsoft, American Express, and some of these other players out there, you would have thought it would have created a little bit more volume. That was not the case. So net, the markets closed flat on the day. Dow actually had a very, very good day because of IBM. Now, IBM alone, I believe, contributed about 60 points. So again, take it in perspective, the Dow would have only been up about 30 points on the day, but it was up 96.5 because of IBM. IBM up 8 points, that's 60 points in the Dow approximately. Okay, that one stock attributes 60 points. Kind of nuts to think that one stock sways things that much, but nonetheless, it's the largest price cap stock in the Dow, therefore it has the biggest weighting. In any case, bottom line, there it is. IBM up $8 on the day. If we take a look at Intel, Intel up 75 cents. Very, very nice day on Intel as well. As we're waiting for the chart, there's the chart. You can see very nice kind of grind higher all day long. That helped the overall markets, the NASDAQ as well. NASDAQ still closed down about a point and a half, but considering Google, which got crushed down 53.5 points, that's not a horrible end to the NASDAQ, right? And the S&P 500 was just up a point. So again, flat day on Wall Street. For those of you that picked up QID with me, only up 7 cents. But considering, again, the Dow was up like it was, and we got actually decent earnings from everything but Google, I'll take it at this point. I still think you have to start to watch for a pullback, even though it's not going to be a big pullback. I still think that's going to happen. Nothing has changed in that regard whatsoever. It still should come in. But essentially what we know of, based on the volume on the spiders, as I flip back to the SPY chart on the intraday basis, you still need a catalyst. Now, if we had gotten bad earnings from Microsoft, Intel, IBM, and Google, that would have been the catalyst, my guess. But because 3 good tech earnings came out and just 1 bad one, they essentially negated each other. And that's why essentially the NASDAQ was flat on the day and everything else had a pretty much flat day. Obviously, the Dow was having a good day or did have a good day. So again, you're still waiting. It's all about a catalyst at this point. It must be something the market is not expecting. As soon as that happens, people will freak out again. If people are expecting it, like those downgrades about a week ago, everyone expected downgrades in France and all these other European countries in terms of their credit rating. So it's no big deal. People expect it. It's the new factor. What's new? What's going to pop up that people aren't anticipating? And that will create the sell-off. All right, and again, my guess is it pulls back, 4 or 5% overall. Then you have one more push up, and then towards the end of the first quarter, somewhere in that realm, that looks to be where it's going to top out in the bigger scheme of things, where we're going to have a big move down second quarter into third quarter, and then probably a rally in the fourth quarter. Okay. Now, again, you can see what happened here as the volume was just so light. Markets sold off early when volume was heavier. Then light volume kicks in, and the markets float up. You have a little bit of a pullback in mid-afternoon, and then they just pop the market into the close. Looks like a buy program hit right into the close. Maybe some short covering for people that were expecting a bigger pullback. They didn't get it. They ultimately covered their shorts, and that's what created the end of the day surge into Thursday's high. So again, that's the one interesting thing here on the charts. You have Thursday's high right here, and then again on Friday we came right into that level. Now again, look for the 132-ish to 133 level. That's still very much in play. Now some of you may say, well, are you worried about that holding the QID? No. I mean, that's a point and a half away is 133. That's it on the SPY. I mean, it's almost no upside whatsoever in terms of what would happen to the QID in essence. So I'm not worried about that whatsoever. If we go to the charts, just to give you guys exact levels, this gap window, and I'm giving you exact pinpoint levels now because we are close enough where it is important, and the exact pinpoint gap window is at 132.60, and then the gap fill, official gap fill here, is at, I'm going to call it 133.35. All right, so 133.35. So gap window, gap fill, those are the two levels you watch for next week. Now, again, I do expect a pullback in this market. However, we have to call a spade a spade. We have to be honest about everything. And the fact is, if volume remains light and you do not get that catalyst, that unexpected catalyst, you will float neutral to higher. Okay? You guys know, really, until I picked up that QID, I'd been expecting neutral to higher. Nothing really has changed. All right, we're just waiting for that catalyst, which it should be around the corner. There's no doubt about it that it should be around the corner, but we're just waiting for it at this point. And again, if it doesn't happen Monday, Tuesday, Wednesday, well, you're probably going to float neutral to upside. Now, we do have more earnings next week, some big earnings. I believe Apple's next week, maybe even Amazon. I have to look at the schedule. So there will be some big players out there as well. But again, it's all about the volume. If volume is going to be 110 million in the market, no matter which day, there's really not going to be a volume to take this market down. Now, remember, no volume means institutions are not buying. If institutions aren't buying, institutions don't believe this market's going to have much more upside. Right now, the light volume tells me that there's obviously some black box trading going on intraday, but for the most part, it's small money accumulating, getting coaxed back into the market, and we know what that means. We know that that ultimately will mean the top is very, very near. And again, I expect a small pullback, then one more push, and a massive rollover. All right, as long as things remain like this, we are going to continue to do what we've been doing. Playing small mid-caps still at the lows of their charts. They'll catch fire. Chinese stocks I'm a big fan of. They had some good runs towards the end of last week. We saw some things like CPSL, which I've talked about before. I mean, these Chinese stocks have just had epic runs of literally 100% in a matter of a week or two. I mean, here CPSL was 35 cents. It's now 70 cents, or hit a high of 72 cents on Friday. That's an amazing move. I mean, HIMX is another example. HIMX did finally pull back, but I mean, look at these type of moves. So if we can capture them, then I want us to capture them. There's no reason to leave money on the table if we can capture these gains. One of the stocks I put out on Friday was LEDS. This stock makes sense. It's a semiconductor player out of Taiwan, about a $90 million market cap company, so it's not a tiny one. It's kind of in that higher range of small caps. Chart very, very cheap, good consolidation, holding the moving averages right in here. In addition, we have to say to ourselves, all right, listen, Cree recently has really been on a tear. I mean, look at the move to the 3-bar surge on Cree. This is a semi player. Any other semi players, they've done pretty well lately. Therefore, my estimation is this LEDS will eventually catch fire, go above $4. Right, just needs a catalyst of any sort. Even volume should be enough to push it. So again, I put that out on Friday for those of you that like the small caps. I think that's a fantastic play. Stocks like THQI, which I still like, up another penny and a third, back above 70 cents. Still looks great to me, but you really want to see this get above the 20 moving average. Gets above the 20, you're golden. Especially if you confirm. You confirm above the 20, it's off to the races. Okay? DHT, basically flat on the day, but that's kind of holding steady. Another one that I like a lot, this little shipper down at the base lows. Doesn't have much downside in my opinion, based on how cheap it is right now. Upside is much more prevalent in terms of risk to reward than downside would be. All right, on that one. What else do we want to discuss here? UNG. I'm sure many of you are interested on UNG. UNG did have a little bit of a bounce on Friday. However, it wasn't a big enough bounce to solidify a bottom. What we need to see is 2 consecutive up days. You have 2 consecutive up days, then you can say, okay, the low should be in at that point. Okay? Now, is it oversold? Heck yeah, it's oversold. Ridiculously oversold is natural gas. I mean, to the point where it's no doubt about it, this was an epic collapse and crash on natural gas. All right? But the fact is, everything bounces. Crash of 87, 2000, tech bubble crash, everything bounces back to some extent. This should bounce back as well. Now, I still maintain my stop at 495, which, again, maybe there's still more downside. We won't know yet. We don't have 2 consecutive up days, and Monday, or I should say Friday, wasn't a big enough update to solidify anything anyways. You didn't have a bottoming tail. You didn't have anything like that. So we still don't know if the bottom is here yet, but we should know more on Monday. My guess is you either have an update which solidifies a bottom, or we're going to go hit the stop and we're going to move out of it. Okay? So again, let's keep an eye on that on Monday. Obviously, just maintain a stop. That's all you can do. You know, when you trade things, when you get in a play, the first thing you analyze before you get in the play is your downside. What's my risk here? Okay, my risk is this much. What's my upside? My upside is this much. Is it good risk reward? Is it cheap enough to warrant me picking it up? Once you get that, then all you do is essentially set it and forget it. There's my stop. There's my target. Let's do it. Now, along the way, as you move up, if things change on the charts, you got to adjust that. You know, maybe you get out a little earlier, maybe you don't. Ultimately, on UNG, my guess is we're going to probably bounce back to 575 or so. Once we get back to there, then, and by the way, that happens to be right in this area right here, 570, 575, then I may move out of the position. You know, I'll reevaluate there. But again, from this move down here, you essentially look for a 50% retrace in my book. Plus, you keep an eye on the 20s as it slopes down. You can't really have your same target on something when it's dumped that much more, because essentially for this to bounce back to my original target, you're talking about a 20+% gain on nat gas. The likelihood after this type of collapse of that type of gain is very slim. I mean, you'd have to have some sort of major measure passed in the House or the Senate and Congress, which would drive it up like that. I just don't foresee that happening, so we have to temper our upside. We still should be able to make money on this on a bounce, but it's obviously not going to be as much if it gets up there, and assuming it doesn't hit our stop. Okay, so that's the UNG update there. Let's take a look at a couple keys here. UUP was flat to slightly positive on the day. Markets held up very nicely. You can see what happened during the day, folks. Again, take a look at this. If we go to the intraday chart of the UUP, it started higher and just kind of faded all day long. That's how the markets are able to fight back off their lows. When the dollar's fading intraday, they're just going to get a bid plus the light volume. That's enabling, even though the dollar started higher, markets, as we know, started lower, and then the dollar just faded and helped the markets get off their lows, coming back to the positive side, or the flat line at least. GLD had a pretty amazing kind of move up throughout the course of the day here. And again, you can see here, weird fake print towards the end of the day. I'm not going to read into that too much, but nonetheless, opened lower on GLD, which is the gold ETF, and then ran all the way and closed essentially at the highs of the day. As a reversal goes, that's an impressive reversal. Now, if we go to your daily chart here, you're now kissing the 50 moving average. I don't think I have the guts to short it, though. You don't have any sort of pattern in there of any sorts. Yes, it's a little bit overbought, but you did consolidate above the 200, so I'm not looking to short this by any means. I would say at this point, I'd give it here. If you get a run in gold on the GLD to the 166.50 area, now we're talking. That's a little bit closer to the range. Okay, next up we have the SLV. SLV here. Now, SLV had an epic move, guys. This was an unbelievable move. I know a lot of you guys wanted to short it. To me, too strong to short just yet. You don't have a 3-bar surge. You don't have it into resistance yet. Yes, it's a big move. Could it pull back? Of course it could. But you don't really have any methodology points that are pointing to that yet. So what I would say is leave this be, and that's what I recommended on Trader's Life. A couple of you guys asked me, what to do here. I said, listen, it's too strong to short. That's an epic move on Friday, up $1.48. What you should do now is you see this gap right here, this area right here, and this pivot high. Let me just draw those in for you. This is what you're looking for. If you're going to short the SLV, look for this general vicinity, okay? You get up in this range right in here, which is really 32.50 to about 32.75. That's a very nice area. Absolutely. I have no problem with that whatsoever. Okay? In addition, I think it's kind of interesting. You'll probably run into a little bit of resistance right here as well, based on this level here connected, but I still would probably let it go a little bit higher. Let it pierce at least that area. Try to get it to that 32.50 to 32.75 area. Okay? Going to the USO, USO had a nice drop. I talked about this and nailed this call on Thursday's video for Friday for you guys. We talked about the downward move, the inside bars, which is an in spirit of bearish pattern. It began to play out on Thursday here with a little downtick, continued on Friday, comes right to this pivot low right here. My guess is you have a little bit more downside short term in oil, at least to the 200 moving average. The 200 moving average also matches up with this little pivot low right there from this point. So net, my guess is most likely Monday or so, assuming nothing crazy happens in Iran, of course. This is where you're heading on oil. At that point, you might start getting some support. Would I be a buyer there? No, I wouldn't. Ultimately, maybe down here at a gap fill, somewhere in this vicinity is where I'd be a buyer if you get there. Okay, but you should have some support right here. All right, the other thing I mentioned as well is notice how you have this trend line right here, guys. This trend line right here. Okay, see this line connecting the pivot highs? All right there. So 1, 2, and 3. And you collapsed below that level, which is a failure of this breakout, which this was a breakout where we went above here. So you collapsed below right here. That's failure. And then notice how you went up and you hit this here and never closed back above it. Even the gap on Thursday, right here, you still by the end of the day closed back below it. That was also a give. We talk about tells in poker, where you can kind of read people, you try to read people. This was essentially the same thing. The gap above couldn't hold above this breakout trend line, couldn't recapture it. This tells you, all right, bear flag in play, couldn't hold it, this is going to go down. All right, learn to watch for those signals, guys, because it can really be a true key to understanding and making even more money in the markets. Taking a look at JPM. JPM went a little bit above the 200 for those of you guys that recall. I keep on talking about this trend line right here, just above the 200 as being resistance. My guess is we probably tag that, and then you see the pullback in JPM. Notice how the 200 moving average, you kind of kissed it here, then pulled back, then officially did it. That's considered an in spirit of hit right here. So I wouldn't really be obviously messing with that. Then it pulls back, kisses it, and then goes above it again. All right, so nice move there. Goldman Sachs up another dollar. Goldman really had a fantastic week. For me, I probably need to sit back. I don't think I could do anything with Goldman Sachs until it gets in this range. Once it's in this range, I think that's a little bit of a better scenario. Okay? All right, so just keep it. And you know it's a little bit far away. We may not get there on Goldman before we have that small pullback, but probably when the bigger pullback, the next move comes in, that's probably where Goldman goes. All right, Goldman's been on a tear since earnings. What other stocks do we want to take a look at? XHB, great call by Nick. Even with a market that closed flat, great pullback. All right, again, I would just follow everything he said on the hot charts and alerts. It should go in that direction and go to those targets. If he changes them, of course, he'll post them up. Or if he wants you guys to take half off, he'll let you know. But right now, considering the market didn't even fall, I love that. I mean, that's a sweet pullback. Now, just imagine if the market starts falling next week. This thing probably easily goes to the 20 moving average and maybe all the way down here for a great correction. But I would say 20 is probably your first general vicinity. Might want to take off half in that vicinity, but he'll update you guys on that one. So again, we're slightly short the market. I have QID, Nick has XHB, and I still have some of my small caps waiting to see those play out. I still like them all. There's really nothing I don't like. SCEI saw a little bit of action on Friday. Closed up 5 cents. This is a great chart. I mean, as charts go, I love the consolidation above the two moving averages. Any sort of pop takes you right up here to this 200 moving average. Fantastic there. And again, every other play that I've given out, I have no problem with it still. You know, they to me, it's just a time bomb waiting to explode and blast off. And, you know, maybe not all of them will ultimately go, but the key is you buy a basket of 5 or 4. 3 out of 4, 4 out of 5 should go. Then you just exit the other one for around the flat line, and that's fine. And again, I will give you a heads up if I stop liking them or if the market gets closer to that bigger correction, which I still don't think is close. Then, you know, once we go into bear market, then you want to move out. Small pullbacks don't matter for the small caps. You know, they'll pause and maybe not run, but they still are fine in my book. All right, guys, I think that's enough for this weekend. No Hype Live Sunday night at 9 p.m. Eastern Time. I'll answer questions. We'll go over the charts for Monday there. Let's go Giants. Let's go football this weekend. And again, have a great weekend. For those of you attending the webinar, congratulations. You're going to be a step above everyone else. Those of you that have taken it, congratulations as well across the board. And again, have a great weekend, guys. I will talk to you soon. Take care.